Okay, we'll get started now. Hello again, and welcome everyone to the third and final hour today of the 2023 Extreme Tech Challenge Bootcamp. We're going to return to the subject of corporate collaborations and investments. We started that with Lars Rieger's keynote on Tuesday, guidance yesterday from JC Charles at Samsung, and we spent the past hour with the experiences of two CVCs of quite different backgrounds. And we're back today with Dennis Liu, who Nancy introduced yesterday, with his broad experience in tough tech and having been and currently a trusted advisor to startups and investors, both sides of the relationships we're talking about. And I'd say Dennis really thinks in a very clear, crisp, and focused manner about what can often seem like a hazy melodrama of investment and business development. But for today's purposes, I'm going to key in on his 6 years of experience at Ford Motor Company's Innovation Center in Silicon Valley, working on both collaborations and investments during what I would say were probably the most interesting 6 years in the automotive industry in my lifetime. And that gave Dennis really a front row seat, or really not watching, but more like a front firing line position in the struggle to align and manage what big organizations want and what scrappy agile startups expect. This is rather much of an open question session, but Dennis, if you had any pitch to give at the beginning, please do that. I'd like to hear your unique perspective on the David and Goliath dance with these kinds of corporate innovation programs.
Great. Thank you, John. Thank you, XTC team. Glad to be here and participating again. You guys do a great service, and even from my time at Ford to now, continue to discover new startups that, although I feel like I'm pretty close to the ground, you guys continue to surprise me and bring more interesting things. So thank you for all you do for the ecosystem, and glad to be here to be able to support. So with that, please feel free as a group to jump in or ask any questions. I'd love for this to be a collaborative discussion. If I sit here and talk at you for next hour, that's probably less fun for both you and I. But with that, let me jump and give a quick little background. John did a great job already. I'm trying to live up to that. So my 6 years at Ford was one where, as you highlighted, it was a time when auto was no longer thinking about four wheels in a box. And candidly, coming out from business school when I went there, it wasn't necessarily my first place to go, let me hop into big corporate, right? As you think about that, I was in the ecosystem, startup ecosystem, looking at venture opportunities. And it was one where, because of the huge change in this existential need within auto to really think about mobility, no longer from four wheels a box, but rather the rise of Uber, the competitors from the tech side coming in, and autonomous vehicles finally, due to the compute abilities, being potentially a thing, even just from the technical approach versus a scientific sort of debate. And with that, there was this huge momentum and desire to say, what should we do? And so right before I joined Ford, they started with 20 people, downtown Palo Alto, upstairs of an old Wells Fargo office. Original mandate was observe and report. Very quickly, the CEO at the time, Mark Fields, said that's not enough, and grew that team to the campus that I was at. I joined when there was about 75 people. The mandate has expanded to, we not only should observe and report, but we really figure out what can we actually do with things and how do we give back. And very quickly then arrived at the conclusion of the currency in the Valley isn't just, hey, I'm here, I'm a big name customer. It was really, how do you help me go through my funding rounds? How do you provide funding to enable some things I want to do? And if there's a way for us to work together, make some money together, that's great. And so it went from a handful of corporates in auto being in the Valley to now there's CBRE has some chart that's out there that's the entire thing's peppered with innovations offices, even of companies that don't do business necessarily in the United States. And so, as John highlighted, I was in Ford where I built and led the corporate venture capital capability, looked at my time there, about 2,000 startups, did pilots, about 150 or so of them, took a couple dozen to be considered for investment committee, and a fraction of those got approved. Ford was a off-balance sheet strategic investor, and what that means is every single dollar that goes out the door literally requires an approval from the investment committee. And so you can imagine my investment committee consisted of the most senior leaders of Ford. You know, Bill Ford, CEO, CFO, CSO, who was my boss, CTO, And these are people that are making decisions for a Fortune 10 OEM. And so as you think about these things, it was a great, as you put it, firing line in the front. And so you had great visibility. If you messed up, the most senior leaders of your company also saw that. So much of the work was to advance either a strategic optionality for the company or address a potential strategic gap. And I know there's other CVCs and innovation outfits that you likely have talked to that skew left or right between strategic and financial, whether they're carved out and Victoria and I chatted about this briefly, and we can dive in a bit later, but part of it is to understand what the need was. And so for me, a lot of that was focused around how do we evaluate starting from technology, how does the team fit, and how that strategy might fit with Ford's strategy. And so as you think about that, and you think about engaging a large corporate as a startup, there's a huge imbalance of size and scale and capability. And while you think of tackling this huge TAM, your large incumbents is something that maybe at a certain stage, you always think in your mind, maybe I don't want to go up against them yet, or maybe I don't want to be on their radar yet. But I would say, I'm pretty sure whatever you thought of or you're working on, somebody has also thought of, and it goes down to execution, how you're able to scale that. And so don't have that fear. If you're talking to a corporate and some random mid-level or low-level manager has something to say or think about it, you don't have to take all their guidance and advice. You should think of that as, if your competitors choose not to make a decision a certain way, that's an opportunity for you. And so obviously there's this sensitivity around signing NDAs and sharing with investors. But I would say there's no investor that you'll meet out there that's willing to sign an NDA. They look at so many deals. And even on the corporate side, sure, you sign those documents, but if you don't trust or you feel good about them or you think that that's a relationship that you want to pursue, walk away, don't engage. The reality is somebody else has probably thought of what it is, and it's going to be about your execution. The other thing I would say to think longer term is there is an acqui-hire potential. And the way to think about that is, extreme worst case, you might be able to be rolled in or get acquired for a decent chunk of change. On the other side, the best case, they're validating your TAM and could help with your approach as you think about what you're trying to do. And so one of the first things that you want to do when you think about a corporate is understand their mandate and really read between the lines. Like, why are they here? How early or how late are they in their own journey to come to the Valley? Sure, they're probably bigger than you and have more money, but are they here to just tech scout? As I mentioned, Ford began with a very narrow focus. They since expanded, and the commensurate capabilities then also came. And so things to ask would be, are you just scouting for technology? Are there opportunities for pilot or proof of concepts? Like, can you do investments? And if so, what does that look like? And a lot of the time, you'll notice that in the background, much of the conversation, sort of pre-work, it happens via text or email or casually. Victoria and the team at XTC basically know everybody in the corporate world, and they can probably give you the scuttlebutt if you corner them and at one of the events and try to act nicely. And those reference checks are invaluable for somebody to give you a warm intro to any of these entities that you might think it's hard to reach. That is just so much more powerful than take a conversation. As I mentioned, I'm looking at so many startups a day and so many inbounds that you really have to filter what you're spending time on. And so if somebody can give you a warm intro, you'll probably less likely to end up in the pile of let's just process. On the other side, as you think about who they are and how they are and where they're in their journey, you can evaluate very quickly, how do they act, right? Do they have a real presence here? Is it literally a couple of folks at one of these, I don't want to name specific co-working spaces or accelerators that you're just renting a desk and hanging out? Or do they have a real presence? Do they have a real team? Is there mandates from the top of the organization to say, come here and do something valuable all together? And so as you go through this journey, it's important to know who you're talking to, understand that person, but also on an individual basis, your contacts, are they the right champion? Do they understand the broader process, or are they narrowly focused in their own business unit? And one of the things that I thought about when I was at Ford was this idea that people that are out here oftentimes have a luxury to kind of think about what's in the future of the company. Oftentimes when you have a job at headquarters, you know what you're doing day one, and you know what you're doing in March, and you know what you're doing December at the end of the year. And that doesn't give you a lot of time to think about looking outside or working with others. And so when you're able to find a team or of individuals, or even a individual that is focused on that spend time, develop that relationship, understand, does that work with what you're trying to do? And if you're just trying to say, I need technology validation, or I need to just understand what the market is, then maybe don't talk to the investment people yet. If you're just discussing and geeking out on tech, there's all these innovation offices and so many people that are focused in this area that are up for grabbing a coffee. There's lots of these open innovation events that you can show up, introduce yourself, and spend some time. And so as you go to these discussions, sometimes you'll get a no, but that's fine. You want that quick no, and you can leverage yourself and your investors and your friends to say, well, what is the right decision maker or the right discussion I should be having, rather than trying to answer shop. At the end of the day, these corporates, what they bring to you is not just money, right? Sure, you can get commercial and pilot dollars that can help feed some NREs and keep your doors open, extend your runway. Longer term, they could even do an investment in you, provide some validation and show traction to your investors. But each individual engagement is, does that fit what you need? Sure, it's great to have a large corporate name to be put on there, but on the other side is the flavor of money is different. And as you think about my own journey here, one of the things that was funny is on one of the trips where we had some senior leaders come out here, took them to Kleiner and my buddies there. And so in their exuberance, they were excited to share a new deal they just did. They said, oh, we just did Desktop Metal. We have BMW and Lowe's in there. And of course, these folks that came said, oh, we looked at that, right? And we were kind of slow on our foot. We weren't be able to move fast enough. The deal was essentially buttoned up. But given the relationships that I had with the folks at Kleiner and the fact that I didn't want to get fired, and so I text my buddy, hey, I don't care what happens. We're going to get a meeting and kind of pull this thread. And through the course of that meeting, what actually transpired was the realization that, oh, you guys kind of know a lot about bending metal. If you're going to be 3D printing metal parts, it might make sense to really try to figure out ways to work together. And so long story short, we were able to get that previous round opened up. We were able to put our CTO at the time onto their board and off to the races after that. But, the point of that story being, it's never too late, even if it's a no, even if there may not be an initial fit, or even you think that I don't need that money. I mean, Kleiner has all the money in the world. It's not like they needed our help necessarily, but it is the flavor of money and how you can engage and what's the sort of win-win outcome. And so as you think about that, that's like the best case. There's other cases where you may have to hit pause or have some fears around this imbalance of size that John highlighted. For a startup, you're trying to move fast and kind of get things done. You're swinging for the fences. For the corporate, you're probably one of many different options relative to their already well-established supplier base. And sure, there might be opportunities where your software foot speed or you're working on something that's a little further ahead than what they're doing. But essentially, you're going to be competing with a competitor and or partner that could be a future competitor with unlimited money compared to you. And so as you think about the types of dollars and what you're trying to work on and what are things to prioritize, it is a discussion between how do I fit into that context? Where do I engage with them? And the types of money and value that they can bring. And oftentimes your investors will ask, well, that's great. I believe in your approach. I believe in your team. I think you're doing something really cool. But how are you going to stack up with the incumbents? And in certain areas, you probably have to figure out how to play with them, if not merely to coexist, but potentially even figure out ways that you might have to work together down the road. And so engaging earlier in a low touch, sort of low commitment pilot POC provides opportunities for you to show traction and get validation and potentially segue into commercial versus investment. And to the extent that you are working with some of these entities, the innovation shops generally are outward facing, friendly, and try to do things with you. Once you hit the CVCs, and we can dive into that if you have more desire to kind of touch upon it. CVC 1.0 is like super draconian. They'll ask for liquidation preferences, exclusivity, structure that is uncomfortable, throw stuff in your term sheets. And honestly, you should probably push back. I think if you've seen the folks that are out there today, and I think the industry at large, or both our friends at XTC and other of these industry sort of ecosystem influencers have really pushed on the idea that CVCs need to act in a way that's competitive to VCs, and the market is changing, and they need to be competitive on foot speed if you want to be in the best deal. It's a self-selecting outcome at the end of the day, and so you will see a relaxation around some of these things that traditionally corporates might ask their suppliers. It's not to say that warrants don't exist or side letters don't exist where you want some sort of limited exclusivity in certain areas, but really picking and choosing what makes the most sense for you. I think today's market is one that's a little bit more difficult, where I would say maybe 2 years ago or 3 years ago, asking for any structure as a non-starter, even traditional VCs are asking for certain things that entrepreneurs may or may not want to do. And so I think at the end of the day, when you think about this, think about your engagement, where it fits where you're at. And as you get to the investment discussion, you want to have people there that you trust and are willing to spend time with. And ideally, if you're going to build a syndicate, think of who are the likely stakeholders that I want in the room as I'm rowing towards the path that I'm going. And, you could have a financial lead, you could put together a syndicate of strategics. If you have a strategic, don't have just one. You want them to be able to keep each other honest and ideally kind of be a little bit competitive. And, I don't know what else there is to tell. I think I threw a lot at you. We'll take a bit of a pause to see if there's any questions. But yeah, hopefully I can share my experiences both as somebody that's been inside an organization like this, both on the scouting and innovation work side, but as well putting some capital to play. My role specifically was around doing the inorganic capital deployments of check sizes that were smaller than spinning up the large scale M&A teams. And then my time at Orrick was really focused on helping a lot of clients navigate that ecosystem. Now I'm on my own out there doing this more directly, putting together both advisory capabilities for large corporates and VCs. And on the other side, helping startups continue to help navigate that with the larger goal, as my friend at XTC to look towards another deep tech fund opportunity down the road. So hit pause there. Any questions that you may have?
Dennis, how should we think about, because like, as you mentioned, one of the biggest values of engaging with CVCs is the potential pilot commercial agreement with the BUs, with the business units. How should you leverage your CVC contact to get you there and working with the BUs and that relationship dynamic?
Yeah, so I would say first is you need to see how well tied they're going to be. There are some entities where the innovation office and the investment capabilities has an intentionally separated relationship. So whoever your champion or stakeholder is that you're talking to, you need to best first understand where they're coming from, what their mandates might be, and how that aligns. I think at the end of the day, we all know if you are a VC or CVC and your single LP is a corporate or a small group of corporates, then you're probably going to listen to them a little bit more, given they kind of write your paycheck. And so as you think about that, then it's an alignment of what the motivation of whoever is actually writing the checks versus who's the team and what their mandate is. And so many times the CVCs that are more independent or carved out as a fund or less so tied in the BUs, they'll tell you that very quickly. But that being said, I'm certain if they have another corporate name on that business card, they have contacts with the BUs, they have people that could be experts. And, once you develop a relationship, don't be afraid to tap them and ask them for that.
And I'd like to ask the other side of that question, which is we had some folks, and I think on the call that were, we had Amazon last hour and a fintech question. Those sometimes can move very fast, but in a lot of places, including automotive and energy, even if they agree, yes, we will put you in the next rev of our BU's product, that could be the end of the decade. And startups often need to get traction like this quarter. And my question is about the time horizons that and I'm sure you dealt with this, that, Ford flips its models maybe twice a decade. And that can often be a real struggle for startups to get, even if they like their product, to wait for.
Yeah. So, yeah. And not to make it a Debbie Downer thing, it's like a 7-year design cycle for an automotive vehicle. And you can imagine that locks down well in advance. And you are fighting an uphill battle. There's a primary supplier that's picked, there's second and third supplier, and then you might be somewhere far in the background as a long shot, maybe, depending on what you're working on or how you might be able to slot in. But yes, exactly to your point, as you think about those cycles, as you think about where you might work or how you might work, it goes on sort of the point that I touched on previously, is understanding how you might fit in and having that stakeholder or relationship with your investor or BU be able to help guide that to you. I think oftentimes there's a mindset that I found with founders that has a tendency, if they don't understand the mechanics of an industry, to say, what's the way that works for me, right? And I think that path of least resistance for you may not be, as John highlighted, the reality of how you're going to get into your end customer. And so for somebody like a large OEM, you have it is traditionally a tiered structure, and sure, it has broken down to a degree. It's a bit more circular nowadays, but it gets to the point where when I was having discussions in my time there, a pilot or POC engagement out here in the Valley, that's easy. I could sign an NDA today, turn that around, get you cranked in, get a purchasing order, and off to the races on a pilot POC. But as you progress and you get closer to series production, you get closer to something that the mothership at massive volumes are thinking about doing, then you know what? The terms and conditions and teeth and everything that comes out with that, you will feel the full force of navigating a purchasing agreement with any large conglomerate. And it isn't just an OEM. Any of these large players have that, because at the end of the day, they're more focused on timeline, discipline, and maintaining the pace of what they're doing. And they just can't slot random things in to kind of change things around easily, especially if it's hardware, it's locked down. And so the other thing that I would say is, as you navigate that, then it seems like a knee-jerk reaction to say, well, maybe I just don't work with them. I'll just figure out, I'll license it to a tier 1 or tier 2 and they'll go my way. Well, that's not how they're going to make purchasing decisions and strategic decisions. You're going to be dead in the water without even having this discussion, even if the technical team loves what you do. And so this is where I would urge you to leverage your relationships with your stakeholders or your investors or others that have been in the industry to get a sense on, well, what's the way to move forward? You know, there could be potentially opportunity for you to get a referral or work on a pilot with the tier 1 or tier 2 that you will likely have to be working with to move it into production or onto a manufacturing line or something. And these sort of 2 or 3-way engagements is not out of the question. Like, think creatively around, is there a way or referrals into adjacent areas that you know to get us some dollars in the door? And the lowest hanging fruit could be feeding you for a little bit with some pilots or proof of concepts, trying to pick up some grants or working on some other engagements with the view of I'm advancing forward, because some of the steps that you're building and what you're building now will likely intersect. So who are others that you can bring in the mix to realize a near-term revenue path? Because all the VCs now need to clearly see you move that. They're not going to fund you a science project for you. But as a longer term view, well, where does that take me? And maybe that is auto or defense or some of these forward moving industries. And, you know, there's no right answer. It's really, how can you creatively think about moving engagement along and keeping enough dollars coming in so your doors remain open?
Well, I'm going to drop my other question right now because it's right on a thread that you mentioned, which is, and some of our earlier presentations this week were not just about investment, but were about pilots and proof of concepts, which can often be sometimes almost cashless, but it's just having someone actually do that. Can you talk a little bit about the value of, regardless of the long term, a lot of things, but what value can pilots and proof of concepts with big players have in your overall development plan?
Yeah, so I'll give you the good and the bad of this. So the good is, relatively speaking to an investment, a dollar of pilot money is much easier to secure. It's usually already earmarked for a certain amount of work that they can do outside or have outside, you know, sort of bring in disruptive or new blood thought processes. And for you as a startup, a dollar is a dollar. If I can get $50,000 in pilot engagement, $100,000, it's as good as taking the investment and then not having to give up equity. Like, there's no downside. I get to do some work, figure out what my customers' needs are. And the reality of it is, you have to think from the perspective of OEM. Why are they doing this with you? Are you just one of many options of just testing out and beta testing something? Or is there a real meaningful, hey, we're trying to do something and potentially this could lead to a commercial engagement more broadly? The earlier you are and the earlier your investments rounds are, your investors tend to be more okay with you trying to pick up a number of these, laying up the pipeline. But as you grow and you move further in the business, you're going to have to filter and pick and choose what are the right pilot engagements to do, because often these are one-time non-recurring engineering expenses that you're using. You can't fund the business forever doing that. You need some sort of what's the next step or more meaningful engagement. But you're right, it is the easiest way in my mind to get the attention or to get engaged and to show some commitment from the other side, from a corporate perspective, to do something. Mechanically, I'll just tell you, when I was out here, the locally and with relatively lower things, even when you moved up, to sign off dollars for pilot POCs were much easier than even $1 in equity, which just triggers, because of certain corporates and certain processes, a different set of things that need to happen. And so understanding who you're talking to and how that process is important for you to understand if it's worthwhile to pursue and how long that it might last, and what's the next step beyond once you've exhausted all the capabilities of that team. And the other thing I would say, as you think about pilot POCs, it sort of does two things. One, of course, it puts money in the door. But second, it is a segue into both investments internally and externally, meaning if you're able to get your existing investor excited about the pilot and POC and the potential commercial engagement that you've done with the large corporate, that's traction, right? They always ask, oh, what's your traction? What does it look like? On the other side, it's essentially also a much longer paid interview with this larger player, so that they may consider whether it is a commercial engagement they want to do, or it might be an investment they want to do down the road as well. Because it's very difficult, or at least in my experience, it's very difficult for a lot of these deeper tech, hardware related things for me to just take your word of, oh, I can do this, right? I need to see a prototype. I actually need to try it out. And it's not easily sort of rewritten in code to just, here, show you a next result. And so leveraging this ability to bring in their dollars to essentially fund your product development and have your customer give you a direct feedback loop, that's a no-brainer to use early on. But as you grow in size and you continue to take more investments and you have competitors, then you start thinking strategically of, do I want to be swimming too close to one player? I myself need to have optionality with my customer base. You know, it's really easy to get excited when you have a big name that's working with you, but is the market perceiving that you're just their job shop to do random things? And are you hindering your own path to product development and approach to market if you're hitched to one horse? And oftentimes, as you know, in corporates, it's many, many options. Is the senior leader that is going to be your stakeholder and champion retiring, rolling off, repatriating back to the mothership, and you're left out in the cold? Really understanding that dynamic and staying close to would be helpful. And so as you go through that sort of debate, and as you get later stage, sometimes it might be, this is a distraction. I don't want to spend any more time with XYZ and I want to diversify. And that's okay, but you just have to pick and choose what you want to utilize if they're aligning with what you want to do. And at the end of the day, it is that balance between, do I have the right pipeline converging into real business that gets my investors excited, but also not sort of shooting myself in the foot and being too tied to one, where your only path ends up being an acqui-hire or a single large customer engagement.
And since we're talking about that, Ishar, I'm going to put you on the spot if you want to comment. He sent a chat that he has actually had some success with POCs.
Yeah, so hey, my name is Ishar, CEO of a deep tech startup, material startup. Yeah, so I think for us, Elysium is a strategy. We do a lot of paid POC. So I think we love it as a strategy because, yeah, like you said, it shows traction, it shows the right unit economics when you talk to investors and when you talk to the clients. And it also generates a bit of cash for us, which was good. My question, so we have two issues. One, during the last 6 months, about half of the innovation arm, which is the one that you're working with, got sacked. So in all the corporates in the US, many of them get fired quite, I don't know, the turnover seems quite rapid in the last 6 months. So that's one. And then it leads to the second question. So how do you navigate from POC, which is usually handled with the innovation business or unit, to the other business unit? because there's also a lot of politics between them. Like sometimes the business unit, which is, doing the purchase later, sees this, oh, this is an innovation project. It's not like a procurement thing. Yeah.
Yeah, so I know that's tough. I do know a lot of the sort of FOMO that created the spin up of innovation arms, where the corporate or mothership corporate side wasn't quite on board. They just felt like everybody else was doing, so they had to. And unfortunately, the outcome of that is, if you don't have the right commitment and real presence, that's one of the first things to cut. Personally, I feel like anybody that is completely ignoring what their future might be and really just saying, oh, I need to deal with today, that's not a long-term strategy, right? So hopefully that's a pause rather than a forever shutdown. And as you see, things are fluid, so stuff can shift. But back to the question, what that means for you, what you should do about it. I mean, there's not much you can do about it. I think it starts with your initial strategy of diversifying, identifying a number of players that could be helpful, and even the ones that are no's, that are their competitors, maintaining those relationships, right? If you work with one OEM, maybe talk to all of their competitors, and without saying their name specifically, say, hey, I'm working with an automotive competitor directly in your space doing X, Y, Z, or not disclosing anything that'll get you in trouble, but saying, would there be something I could do with you, or is there any applications, and building that so that if one goes away, you do have additional hookers in the fire, so to speak. And so as you think about balancing that versus how are you going to use that to segue from this is a cool pilot held in the innovation arm to meaningful business, that goes back to the understanding your stakeholder, where they fit in the organization, and having that difficult and candid conversation of, are you only here for research? Are you just doing scouting and understanding and sort of picking and choosing what to do? Because any of the committed corporates realize that that's just one of many things that you would need to do to be successful, right? It is not a one-way relationship. It just doesn't work that way. If you're going to be perceived as predatory, just taking, nobody really wants to talk to you. I'll be honest, when I first was here at Ford, we had to earn our way frequently by the skin of our teeth to say, hey, we know about stuff too. We're cool also. Because there was a perception that corporates were slower, that OEMs are very focused on sort of the tier structure of doing things, and the appetite within automotive for innovation was through this old structure. And I think through the course of those 6 years, that the glory days, as John highlighted, there's a realization and fear that really lit the flame across the industry, under all the senior leaders, that, hey, we really need to do a lot more, figure out what to do there, because the things that are being done in the Valley that they're good at is very impactful to, as we thought of the business, relative to building 4 wheels in a box. And today you see on the forefront of this is the autonomous vehicles, electrified vehicles, that are very clearly market motivating topics that 10 years ago, people would have said, stop wasting time, that's a research project. And so as you think about this, the way to kind of pursue it is, as you get to the innovation arm, understanding the process, and they'll know where the handoff is. And maybe they'll tell you, well, after this, I don't know what else we can do, right? You can also tell if your discussions to get the PO or the next pilot become slower, or they're not giving you as hard work to do, that maybe you're running at the end of the line of that engagement. And, politely thank them and move on to the next one. And if it's the right situation, then you'll likely get plugged into the right BU and things like that. But I agree, if it's just a purchasing discussion, it's running an uphill battle. You're fighting larger incumbents. And so to the extent that you can have your stakeholders back channel, or your investors have relationships, help you do that, and understanding their timing, right? It feels forever and slow and not moving in your shoes. But as John highlighted, if the design cycle is 7 years or 5 to 7 years, that's twice a decade at most. You probably run through your run rate a couple times over. So how do you stack your revenue to kind of enable that? That's the name of the game, right? So not an easy answer. I think we're in a tough spot now. I think there was a time when you can just throw a rock and you'll hit some innovation office willing to throw some money at you. Now it goes back to the basics of understanding what they need and what you can deliver. And for those things, I would say there is still funds, there is still investments, and everything is still happening.
Okay, Eugene, I see your hand. I think you had a question up next. Yes.
Yeah, so the question is how you overcome. So this is a true story. So we get in touch with a corporate. They've been interested in technology similar to ours for almost 10 years, but they've been burned before by the startups, or actually not even startup. They became quite big afterwards. But in any case, they are interested in similar technology and working with other companies before, and they burned so badly before. And now that their R&D people is picking up because they see the new technology developing in the same sector and are interested, but then all of a sudden CVC people coming in and say, no, we've been burned before. We lost so much money. We're not gonna look back in the sector anymore. So my question is how you overcome a no like that in a CVC setting, if you have any 2 cents to give us.
Yeah, so I would say any CVC that only looks backwards and just assumes that will always be the case, they probably shouldn't have their jobs, right? Like the world is constantly changing, and if you can't change, that's like literally the definition of why you exist. You're here to put capital into areas that you strategically think can change. So I don't know who we can chat offline who that might be, or we, if helpful, but as you think about some of that, you also have to think, is that the actual answer, or is it that's the easy answer to give you? I see that because I've been burned in this technology, I don't want to touch it, as usually the sort of polite fake answer that I don't really want to give you. You might spend some time to understand strategically what are steps they're taking, what is their approach, how you might fit in or how you might not fit in and diverge from what they're trying to do. And if it's the case, for example, if they decided, and I'm just using this totally as a hypothetical example, if I believe, let's use Tesla, right? If Tesla believes they're going to use cameras only and don't want to do anything in LiDAR, you can continue to talk about having the best LiDAR, the cheapest, the greatest capability there, but they're not using it. So their polite answer is going to be, oh, well, we worked with this before. It doesn't make sense. But reality going forward, you're not in the roadmap at all. So if they're already doing that, means at least a couple cycles, you're just not going to fit. Sure, maybe something in research, sure, something small in POC, but commercially, there is no path. And so it's going to be a hard time for whoever's the stakeholder to say, hey, I know we totally don't believe in this approach. Let's put money, right? I think getting to understanding why the no is motivated is going to be important. And I can't believe if somebody just gives you that answer, oh, because of previous ones, we're not going to do it. The other way is if they have this sense that I've seen more is oftentimes the BUs or the research team or some other pocket inside the organization feels like they own this space or they are the experts in this space, and you're coming in and you're disrupting it either to make them look bad or politically there's issues with them. And so they just try to kill it, like the not invented here syndrome, right? So as you think about these things, it is the only way is to kind of work through it, work with your stakeholders, get exposure to the more senior players and stakeholders in their organizations, and you let the dice fall where it may. And so as you go through those processes, keep an open mind and try to think of when they give you that answer, what is it that actually motivated that? And sure, maybe it's they lost money. Well, for the corporate side, I would say if somebody believes you always make money from all these investments and even research, if you're always successful, you're either lying or cheating. There's just no way that happens. And I wouldn't let that stop you from continuing to engage with them, but rather, take an offline or smaller conversation with your stakeholder, your champion, and say, what's actually motivating this? Is there anything we can do? And if not, that's fine. Is there others that are maybe even outside your organization that I might want to talk to? And if you have a good enough relationship, you can use that as a way to kind of segue and motivate others to do things. One of the examples that I'll use is for battery electric vehicles. For the longest time, broadly in automotive, battery chemistry was thought to be essentially done, right? In the internal combustion engine world, the batteries need to only be a certain size, only a certain amount. And so you can go through purchasing existing channels to get that. But when we flipped the switch, when Tesla came on and and sucked up all the Panasonic supply, and all these other players are saying, hey, we, instead of selling 75 individual batteries to consumer electronics players, one skateboard is like 75 batteries equivalent, then auto became a real presence and a need to revisit the previous approach. And so keeping that in mind and being mindful of that shift would likely be more helpful rather than just accepting, okay, it didn't make sense previously, because the world changes.
Thank you. Thank you.
Yep. I think we might have quite time for one or two more, depending on Victoria and John's schedule for getting ready for the next call.
I have one question. So yeah, when it comes to this type of corporate innovation units, sometimes it's pretty hard to get a promise from them that this POC that we are doing actually converts into a future commercial contract. Yeah, and there have been a lot of feedback. So last time when I talked to VCs about these corporates that we are currently engaging to work on POCs, and the comments that they give is, oh, this corporate is very famous in doing pilot trials, but nothing comes out of it, regardless of whether the POC is successful at the end. So as a startup who doesn't want to waste money on something that results in nothing, so how do we actually kind of get some promise or some promises in terms of getting a commercial or securing a commercial contract with these corporates that we engage with?
Yeah, so you can't get that promise, and you won't. And if they give you that promise, that would be disingenuous, because for them, for you, that is the ideal sort of path. Oh, I get the pilot, I convert that to something, and we're all happy. And yes, your investors have given you great feedback and guidance to say, hey, I know that corporate, or I know that they've acted this way. And so I'm not saying don't do it, but really think of that might be, given previous likely outcomes, something to consider, and don't spend too much time, right? A corporate should never have you do work for free. The point of these pilot and POCs and this imbalance in your size and scale is there's essentially outsourcing research and gaining insights from working with you. So you should be paid for that. Don't agree to free work. On the other side, if you think about the progress and how you might fit if it could move into commercial, it's a long process. It is a long shot oftentimes in this space, and that's the reality of it. But you also have huge upside if you hit a time when that need just becomes front and center for them, and they'll pay you an outsized amount of money to take you off the table. And that's the whole point of why you're doing this. And so as you go through those discussions, you're going to keep hitting a bunch of no's, and that's okay. And I would even say if somebody says yes at the corporate level and they say what they want to do something, they promise it, they could change if the leadership changes or the mandates change. Like, what is your actual recourse? Are you going to try to sue them? You're going to try to sue your customer? Are you going to try to sue a company much larger than you? It just practically, it just doesn't work. And so I think going in with the cautious optimism of, if I can be successful and I see things continue to fall in the right way, continue that relationship. If I see a progress slow down, or if I see or feel that this isn't going anywhere, then maybe it is a time to say, well, I'm going to focus less on company A and focus more on company B. And some of these sales cycles, as John highlighted, is long. It's going to feel like forever and a day to you, but within the context of what they're doing, when typical design cycles for vehicles are like 7 years, you've seen some of these EVs that came on recently that's like 3 to 5 years spun up. That is incredibly fast in consideration of how they typically do everything. And so, I would say cautious optimism, don't be completely frustrated, and do listen or back channel some of those things. And the reality might be you need to find other pockets of revenue while you wait or hope for that piece, and deprioritize it on your day-to-day.
Great, thanks.
Cool. Anything else? And I see Victoria put up my LinkedIn, so feel free to ping me if you're shy and don't want to ask. And even though it's a safe space, but you can feel free to ping me to ask stuff if I can be helpful. John, I'm right on time, right?
I want to thank Dennis and your experience having worked at major, auto manufacturer has really, and also various backgrounds have also brought a lot of value to our community. I think you have really fantastic advice, really sage advice about practical engagements, CVCs, and how do you even qualify, right? They're qualifying you as you're qualifying them as well. So I appreciate you sharing your time and expertise.
So happy to do that. I think a lot of this, it is an ecosystem, right? People and corporates that are doing good things, you can continue to work with them. Those that are not, either close their doors and go away, or people know to avoid them. So it's pretty good to be part of this great ecosystem where you guys are doing great work, and happy to continue to work together.
Yeah, and I think like what you said, and this is a consistent theme throughout the sessions today, is know your customer, do your homework, do your research, know what the CVCs are focused on. And then also it's based on relationships as well. Get a warm intro if you can. And then you can also validate potential partners that way as well. So keep building that network, keep showing up. Do your homework, and then manage expectations, right? And also these are my personal takeaways, and also have many balls in the air. So you're not just working with one CVC, but you're working with a number of people to have more shots at the goal, so to speak.
Yeah, and stay with the people, right? I think I've known Victoria when she was doing innovation within the UC context, and I was at Ford, and now I'm like 2 jobs away from that life. And so as you identify people that you enjoy working with, that are good for you and the ecosystem, stay in touch. You never know where people land. On the other side is, even if you end up at an innovation office and talking to somebody technical and maybe feels like they're junior, still, you're already there. Spend the time, make valuable use of the time. You just never know. They might start a company themselves, get an exit, become an investor. Never sort of be like, oh, this is not an important meeting. You're already there. Take the time. Talk to a couple people outside of your network and go from there.
Awesome. Thank you so much. Thank you, John, for hosting a great session.
My pleasure. And again, my thanks to Dennis. He's been a very good partner and friend for XTC. And I just will add, and then we'll be done. There we are. Tomorrow is the end of the week and the end of this boot camp, but we still have 2 great sessions. Back again talking about both marketing and investment. The first session is on branding strategies with another great British Marcoms firm, Beep, that does the work for XTC. And then I believe there's a gap of an hour, and then at 9 o'clock we're going to have an open town hall with 3 of our XTC finalists to talk about their experiences with basically all of this, branding and investing and proof of concepts. They've each been through this, and they've each been very successful. So that should be a fun and quick hour to wrap up our bootcamp week.
Great.
And I think also, if you can take a picture of this or want to, this QR code or the URL at the bottom will get you to our entire agenda. And all of these will be up probably next week on our YouTube channel for you to review. And with that, I think we are done. Yes.
Thank you. Thank you, everybody.
Everyone.
Thank you.